Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. Hey, we're always in the chat and we never desert. Each verse rehearse, and if it works, we burst. When I spit a line, you'll stay on time. Money on the mind and an open dime. Cloaked in prime, soaked with rhyme. Bespoke design, you get smoked and fried. Open eyes, know when I go that I go in size. When I'm throwing up my open buys, I'll be hitting the lows and highs when my flow supplies. And it's no surprise that I'm dope. Haters cope when I know the cries. Dripping soap, I'm clean and fresh like open skies. You know we're wise on Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. Christine Kim from Galaxy Research, she is back. We're going to talk about Shanghai, the upgrade on Ethereum that went great and enabled unstaking. Also, a bunch of other random crypto topics with Christine. We'll get her take. And of course, we'll check in with our friend Beimnet Abebe from Galaxy Trading, as always, to talk about markets and macro. But before I get into all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information contained in this podcast represents investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Oh, what a weird beat. I was doing some weird flow on this thing. I know that's going to make the episode great. Let's get right into it. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, my friend, great to see you.
Thanks for having me.
It's like we could literally, I try to say it the exact same way each time, and you say, thanks for having me. Every same way.
What else am I supposed to say?
No, we got to do a montage.
Yeah. Oh, boy.
Well, good to see you, man.
Pleasure.
I guess right now we're down a little bit. Viewers of the YouTube channel can see the block clock 29.3. It seems fine.
Yeah, absolutely.
A little bit of a minor deleveraging, I think we saw. ETH was below 2K. I think it might be back around 2K. Like we're updating now, 29.335 on Bitcoin.
That's the direction we like.
$5 higher.
Mm-hmm.
Anything to that? Just before we get into other stuff.
Yeah, the sell-off today really started when you got a surprise print on UK inflation. It surprised
which was
higher.
High. Yeah.
And you got a repricing of the UK curve. Basically, you took terminal rates in the UK market to like 491, and in the US, they're a little over 5. So UK's got an inflation problem. The market was like, it's got a worse inflation problem.
It's worsening.
And worsening.
Yeah.
And, when you're still surprising higher than high estimates, it's bad.
Yeah, and that's not what we're doing in the U.S., right? We've been like flat or slightly low.
We're coming in line, but the data's headed in the right direction.
Yeah.
Depending on how you slice and dice it, there's something for everyone.
Yeah.
So it's a little bit tricky. But what I do know for sure is that people are really bad at forecasting inflation. And so I think what you're supposed to do is just react to the data as it comes in. But back to our original point, you had this surprise print, and it caused the market to sell off. Equities moved a little bit lower. Dollar actually caught a bid. And you had, crypto sell off, when it was dead close to trend highs. Yeah. Right? Bitcoin was at 30,200, a couple hundred points from like literally Pico top of the trend. And it was like poor liquidity, and then liquidations begun. And so you had about, 250 million in liquidations go through into a thin market with like broader risk markets selling off. And now you're back down to 29.3. But again, it's like, what is this? A sell-off for ants?
Yeah, it seems fine. I mean,
for a crypto person that lived through the last year, I was like,
right, 30K to 29.3 is like, we're still in the same sort of range anyway.
Yeah, for me, I'm looking at a market that's clearly trending, right? What I mean when I say clearly trending is you've consistently set higher and higher lows and higher highs. And it respects, things like trend lines, etc. And for me right now, Bitcoin is still trending higher, but it did lose some momentum, at
just
the dead
today.
Highs, just today.
Yeah.
And I think if you think about it, like it takes a lot of conviction to buy an asset up 80% on the year.
Right.
Right. You have to be very convinced to add to your position at those highs. And so, I think it's natural that we get a little bit of a pause, a relief here. And if you just think about it, we spent a couple weeks around 28K, and then we broke out.
Yep.
So it wouldn't shock me if we were going to consolidate for the next couple of weeks. I think a couple of things that are notable is you haven't really had like a huge bid in vol, or vols haven't really spiked that much in the options market. And so what that tells me is that people aren't scrambling to buy crash protection, right? So it's not like, oh, we're worried that Bitcoin's going to go back through 25K, 20K again. It's more like, okay, you know, we've sold off a little bit, but it's not really a need. There's no real need to panic.
So there's no fear.
No fear.
It's more just in a range. And
in a range following macro.
Overnight
and
following
liquidity,
macro.
Liquidations.
Yeah.
And so that's kind of what it is.
Got it.
I'd say more noise than signal.
Yeah.
Is the best way I would interpret that.
So let's move on from the crypto stuff, because really, I mean, we're making a whole few minutes out of not really that impactful of a move. I did see a large tech company is partnering with a large bank to offer a high yield savings account for retail.
Absolutely.
Now that's a bank account.
Correct.
Through a nice tech platform. Giving, near 4% or, in the
4.15%.
So that's competitive with a lot of the money markets and stuff.
Absolutely.
How do you think about, because I've said this before, I don't actually have a bank account. I, as a longtime Fidelity employee, to the extent I need to access fiat services, I have typically used my Fidelity accounts, which, they have
all the services
debit,
you need.
check, wire. I mean, it's basically a bank, except it's not. And so I wonder, but I can buy things, of course, in those accounts that I can't buy in a bank account, like securities or fixed income products or money market funds, which have been yielding the highest, I would say, of any cash instrument. Yep. How do you think about bank deposits versus money market funds in general? Like the trends, I don't know, whatever. Like, I mean, why would anyone be at a bank at this point? I mean, I hate to say that. I'm not trying to spark any kind of fear.
I but it's like, is exactly the question folks should be asking themselves.
Yeah.
Like, why am I at a bank that is paying me substandard yields in a world where the Treasury Secretary and the Fed basically told you, we're going to insure all deposits, right? We're going to create blanket facilities to, that you can post securities at par and get all this financing for term. And so basically no bank's going under. They might screw equity holders, but deposit holders are safe. And that's coming from senior people in the government. And so if you're telling me I have a blanket guarantee on all deposits, why wouldn't I go to the institution paying me the highest interest rate?
Yeah.
Like, why do I need to be at, one of the GSIBs earning like sub 50 basis points when this company we just mentioned is offering 4.15?
Right.
And those deposits are basically guaranteed. Because I don't own stock in that bank.
Right.
I'm a depositor. Yeah. And so what you're having happen, or what I think is about to happen, is a level of competition for deposits that has never been seen.
Interesting.
And it is going to be catalyzed by the fact that technology is better than it's ever been.
Right. So fintechs, other big tech companies partnering with whomever they might need to.
Correct.
To bring it directly where consumers are.
Being able to move money from one deposit institution to another in seconds. Yeah. Right? That means that the competition for deposits is frictionless, essentially.
Right. Right. It's not like the Bailey Savings and Loan where you got to squeeze through the door and they're like, I was making this joke before about the bank runs when they were happening, right? When he's like, they're like, we need our money back, George Bailey, right? And he's like, the money's not here. It's like in Frank's driveway and like Peter's house.
You've got a good voice for that.
But in those old fashioned bank runs, you had to squeeze through the door if you were like, right?
Yeah.
And now already
like,
SVB, I think, was like the fastest collapse ever because of wires and mobile banking and whatnot. But
I mean, fundamentally,
this is even more so.
I mean, and just to take back, not that I'm a critic of central bankers, but when they were thinking about what the consequences were of jacking up rates this quickly, this high, they fundamentally misunderstood what banks held in their balance sheet and how quickly deposits moved in the context of, the deposit marketplace. And I think they're dramatically underestimating it now too.
Yeah.
Right? 6 months from now, people, you're going to have such intense competition for rates. I bet you those GSIBs rates are going to be significantly higher.
Interesting.
And what does that mean? That means their interest rate margins, their NIMs, are going to go down.
Yeah.
And that is because, again, you have a blanket guarantee from the government that all deposits are safe. So why am I not in the bank, at least with my portion of my deposits that, I don't need to move to some random country where one bank only has access, et cetera. But on anything that's excess, you should be in the highest possible yield because there's no burden or hindrance to moving that money around.
Frictionless.
And you
got FedNow coming out too, which
FedNow,
theoretically, I mean, that's more glue on the interbank side rather than
absolutely.
That should make everything move faster. Also, it's going to come out this summer.
And then now, though, you start to get into a scenario which I don't think the Fed has properly anticipated, which is 6 months down the line, like it's going to be highest interest rate deposit institutions win the most, but what is actually happening to like reserves in the market? 6 months from now, you're going to have 6 more months of quantitative tightening, right? You're going to have a TGA balance that's going to go from 99 billion to that's the Treasury General account. That's the bank account for the Treasury. It's really low right now because of the debt ceiling.
Yeah, because they're out of measures. They're out of money, basically.
They're out of money, but they're going to get money soon. But where does that money come from? That money comes from the banking system. So anytime that Treasury account goes up, that is money being drained from the banking system.
Yeah.
So you have QT.
Yeah, they're not printing money for that, right? That's
correct.
Normal allocation.
Yeah, correct. Yeah. That is
So QT, then that will suck more out too.
Now suck more out, and then get this: you still are dealing with the credit crunch impact of Silicon Valley, right? And et cetera. Folks are going to be lending at higher standards, right, and at higher rates, et cetera. And so you're going to have a credit impulse. And a lot of shitty institutions or bad institutions or small ones, et cetera, or non-competitive institutions.
There you go.
Right? Non-competitive institutions.
Yeah.
Like, imagine you bought a bunch of 30-year duration at the dead lows and yields.
Right.
And you're not going to be able to pay the highest interest rate possible.
Right. So you're going to be much less attractive. You're going to have less money to lend.
Yeah.
So small businesses are going to that portends a lot of tightening.
It's a lot of tightening. And then throw in what we know about the back half of the year, which is, activity is going to slow. Right? Like, unemployment might start ticking up back then.
Right. You have less small business lending if the regional banks can't.
Small business.
They're going to be squeezed harder than the
Student
GSIBs
loans,
and the money center banks.
Credit card.
Right.
We've talked about it before, right? So there's a strange combination of things that can start to happen in the back half of the year. And I think it's totally misunderstood by the market. And honestly, it's a little concerning right now to me. Like I'm a bank money market person, but stating the facts, the fact pattern is about as bad as possible. Listen to this. You've got about $160 billion between 2 emergency Fed facilities right now. You've had 2 banks that have had to get taken over by the FDIC, another one that needed $30 billion in deposits from the largest institutions. Point blank, our banking system is in crisis and is being masked by the FDIC and these blanket facilities. But nobody cares because it's like, wait, there's just another random Fed facility with billions of dollars. The average retail person doesn't care. But what people don't fail to realize is the U.S. was on the brink of a systemic-wide banking crisis, and they're able to gloss it over with a discount window facility and a BTFP. But think about this, the idea that the most influential central bankers in the world miscalculated their monetary policy to the extent that it put the entire U.S. banking system at risk. Right? Where is the accountability?
Yeah.
Anyway,
it's fascinating.
I could literally rant on this for a while.
It is wild. It's truly wild, right? I remember us calling whipsaw monetary policy last summer. Cut as fast as possible. Hike as fast as possible.
Yeah.
I mean, it's it's wild. And
it's a really hard job, and I respect them for doing it, and I don't necessarily know if I would ever want that job or do as well at that job.
Right.
But, you have to realize that bank balance sheets aren't that hard to understand. Yes, I get it. There's 4,800 of them in the U.S.
A lot of them.
But they're not that hard. And there's clearly a lack of proper diligence in this space.
Right. It's sort of, I've seen people and some policymakers pointing to the fact that only 2 had to be taken over, that's what, it's not that big a deal. And you're like, dude, that's only because they essentially offered to just give everyone money for free.
Yeah.
In order to stem it. If they hadn't, if there wasn't that discount window.
Discount window or the
special facility.
Yeah, BFTP, whatever.
We don't know. We haven't looked at all 4,800 either, but many banks would be under.
Oh, many.
Many.
Wild
times.
Now think about this, though. The largest institutions now, as a function of this banking crisis, are now, they've lost a pretty big competitive advantage. And so,
You mean the sort of the too big to fail? Like,
too big to fail.
Now, if everyone's kind of backstopped.
So small, you can't fail. Like, I don't know how to come up. Like, what's the counter
and you know, the Treasury Secretary, I remember there was a viral clip when Janet Yellen was in Congress a month ago or so, was asked this by a congressperson about their own local, I think it was maybe when she was in front of the Senate, so a senator, about their own local small bank. Would that also be covered? And she was sort of like, meh, no. But like, when we so they're kind of saying we haven't backstopped the whole thing, but we kind of know they have.
But here's their angle is we've backstopped it, but we're only backstopping the depositors, not the equity holders.
That's what they have said,
right? And so they're if
you run a bad bank, you're going to lose all your money, as the owner of the bank.
Yes,
but
as the owner of the bank,
if you're just a humble depositor,
so they're saying they're giving the middle finger to stockholders.
But that was something that depositors, your point at GSIBs, right, the biggest banks, right, literally the book Too Big to Fail about those banks during the Great Financial Crisis. It's been long understood and implied and believed by the market that they were too big to fail, that if those faced crisis, they would absolutely be backstopped. And
absolutely.
And that was a competitive advantage for them. That's really interesting.
Yeah. But now I'm like, why do I need an account at any of these
Just
institutions?
go wherever the yield's highest.
Go wherever the yield's highest because it's guaranteed by the government.
Very interesting. Beimnet Abebe, my friend, as always, from Galaxy Trading. Thank you so much.
Pleasure.
Let's go now to our friend Christine Kim from Galaxy Research. Great to have you on the show again, Christine, as always.
Thanks, Alex, for having me. So
one of the main impetuses to have you on the show, of course, although we always love having you, was the completion of the Shanghai and Capella upgrades last week on Ethereum. You were following it. You've been following it. I joked that you were the queen of the merge with your coverage last summer and into the fall. Just what are your initial reaction, from a big picture standpoint, on the completion here of the merge?
The upgrade went really smoothly, and it reminded me a little bit of how I felt when the merge was happening. There was so much anticipation, so much excitement, and a lot of anxiety around how the upgrade would go. Like for the merge, it was just a technically very complex upgrade. But for Shanghai, a lot of the concern was around sell pressure and around how much withdrawal activity we were going to see right at the time of Shanghai. But for both events, the merge went extremely smoothly. There wasn't any bugs, no technical failures. So it was a pretty boring evening. For the night of Shanghai, which was at 6:30 p.m., I was also here in the office, anticipating a lot of movement, a lot of market activity. I thought we were going to see just large swaths of withdrawals, a ton of validators that had been in the exit queue for a while start to get unstaked, which we did see some of that activity, but honestly, the upgrade went so smoothly and people were so bullish about the upgrade having gone smoothly that all of my anxieties around would the upgrade go well was kind of it was kind of a non-event. So it was a very boring evening. It reminded me of wow, I did this 6 months ago and it feels the same.
Yeah.
A very
So we'll get into it in detail in a minute. We'll also talk about some other random crypto news to chit chat about. But let's dive deeper here on Shanghai. We talked about withdrawals. What did that end up looking? I mean, it's now today is Wednesday, the 19th. It was last Wednesday, the 12th. Mm-hmm. You're listening on Friday, the 21st. So I guess it's been a week. I mean, what have withdrawals looked like, right?
Yeah. So we've seen about over 1 million ETH become liquid. Initially, the first couple of days right after Shanghai, so after that Wednesday, you saw a lot of backlogged rewards that validators have been accruing since 2020 from the Beacon chain become liquid. So you did see a huge spike in the number of daily withdrawals happening. But after that period, basically the number of withdrawals that are happening for validators shrunk quite dramatically because everyone's backlogged withdrawal rewards had already been withdrawn. And so now when the sweep comes around again, it's basically an automatic, every couple hours, your rewards become withdrawn, your rewards become liquid. And so there's just not that many rewards anymore to withdraw. So you saw there's a pretty a very popular chart that's been shared from Nansip. But you saw kind of a spike in the number of partial withdrawals the first couple of days after Shanghai, and then you saw that number diminish quite rapidly. And then I think around 4 days after Shanghai happened, so during the weekend after Shanghai, you saw a bunch of validators have the appropriate credentials to be able to receive partial withdrawals, because right at Shanghai, there was only a couple of validators that had the correct credentials.
They were properly set up, basically.
And so you saw another spike again of like those validators with the backlog of rewards be able to withdraw their ETH, and then you saw that kind of taper off really quickly. In the same timeline. And so now we're in this phase of just the majority of validators now having their rewards being withdrawn every couple hours or so. And there's not a lot there. Issuance isn't, as we know, because of how deflationary ETH has become as an asset, we know that there's not a ton of rewards that validators are accruing on a day-to-day basis. Certainly less than what was being accrued to miners before the merge.
And then what about like straight up validator exits, right? I mean, there were some big groups. One that we had thought was Kraken, since they had agreed with the SEC to shut down their staking as a service program. Because when you talk about the rewards and the partial withdrawals, we're talking about those newly minted ETH that validators had earned, but not the principal ETH, not the principal balance, the 32 ETH per validator as being big exits. But have we seen those too?
Yeah. Well, I mean, the amount of ETH being withdrawn, the amount of ETH being liquid, is the vast majority of it is rewards.
Yeah. But that includes, that 1 million ETH number includes exiting validators too.
It does. Yeah. But the majority of that 1 million ETH number is, I would say, probably like 80% is partial.
Yep.
But you're right. For we have seen a large number of exiting validators. So just to give context, there's about like 500,000 active validators, and we saw about 15,000 validators exit. And currently, I believe there's an additional 15,000 in the queue waiting to exit. There was some analysis done on like what kind of validators are these, who are the operators, and like you said, the entity that was unstaking the highest number of validators was Kraken.
Yeah.
And we understand why they are.
Right.
So I would say, like, in terms of exiting validators, we have seen quite a number of validators restaking back into the network. The number of new deposits is also increasing. So I would say, if you think about the number of validators exiting and the number of validators entering, it's about 1/4 of validators, the amount of validators that are exiting and the amount of validators that are coming in. The amount of validators that are coming in are about 1/4 of the amount exiting.
So, a million ETH, what the supply is about 120 million or so ETH total. So it's, less than 1% of the supply became unlocked or newly liquid. Right. Obviously, the rest of the supply is not necessarily liquid, but not an insignificant number, but not enormous.
No, and 1/4 of that coming back into the network, and a lot of the activity that we saw in terms of like how much ETH is going to exchanges, potentially to sell. And I really wish there were more data around this, like more data on, aggregating the validator labeled addresses and seeing what flows are flowing to exchanges. We had that for Ethereum miners, but unfortunately, we haven't quite caught up on this end. But from Kaiko, I did notice that they were reporting on some sell pressure activity since Shanghai, and they reported, I think, like something around $25 million worth of sell pressure, which is really minimal, I think, in terms of I think their volume.
It's not much. And and of course, like through the first week after this was a pretty bullish environment for Bitcoin and ETH. So I think plenty of demand. I mean, today on Wednesday the 19th, as we record this, this is a little bit of a red day for cryptos. Bitcoin, you can see behind me, is trading at 29.2. ETH was down below 2K, but I think is about at 2K. I don't think those are mostly technical levels. I think we saw like a chunky Bitcoin seller on Binance like wipe out, cause some liquidations, but doesn't seem withdrawal related really either. So it seems, like you said at the top, a little bit of a non-event from a market standpoint, other than people are excited. And now there's this new thing you can do on ETH that you couldn't do without risk. Yeah.
I mean, we were talking about this yesterday, but the big question now is like, what is the next narrative for Ethereum?
Yeah.
Like, what is the next big thing? And
what is next? So now they can, I was saying this week that they can go ahead and move on finally. Developers can finally work on other stuff.
Yeah.
What are they working on and thinking about? What is next from a development standpoint?
So from a development standpoint, developers are thinking now of scalability. through the proto-dank sharding EIP 4844, which has been in the pipeline for, I think, over a year now. The next upgrade for the execution layer is called Cancun. And then for the consensus layer, it's called Deneb. So I think the merge name is...
Dankun?
Dankun. It's going to be something weird. But anyways, just to clarify this now, because there was a lot of confusion around the time of Shanghai happening.
Right, because both layers were upgraded, right? So Shanghai and Capella.
Yes.
So people were saying Chapella, like Dave Chappella. Right.
But yes. So Cancun Deneb is all about adding in a new fee market, adding in a new transaction type to really make the cost of layer 2 transactions cheaper.
And this is where we were talking, I think we said, you and I had a discussion, I tweeted this somewhat provocatively a few months ago, that in its simplest form, there's obviously differences, but 4844 proto-dank sharding is kind of like SegWit.
There's a lot of similarities.
Right? I'm going to give my layman's attempt at this, but they're creating a new transaction type and a new space and fee market for where those transactions go. Yep. They call them blobs, right? A new blob space, basically, specifically for roll-up settlement transactions, right? Yes. So now those they have their own lane to drive on the Ethereum highway that has like slightly cheaper fees or something else, right?
And it can also be pruned away.
So it really is, it's prunable. It's a special area for certain types of transactions. And if you use those types of transactions, the network incentivizes you by lowering the base fee.
Yeah, well, I mean, one of my concerns is that the amount of space that is going to be given initially through proto-dank sharding will not be enough for the demand on these layer 2 rollups, especially with the launch of like ZK EVMs and other optimistic type rollups. I wonder if that lane will also become quickly congested.
Interesting. So wasn't that touted as I don't know, with Ethereum, it's never the end-all, be-all solution. They'll always have something else they want to do.
Yeah.
But wasn't that touted as like a major scalability upgrade?
Yes, it was. And I think dank sharding in its fullest form will implement a lot more scalability, I don't know, initiatives. But proto-dank sharding, I think, is a little bit like a prototype of what the use of Ethereum as a data availability layer could look like. Like if all Ethereum dApp activity does move to layer 2s, here is some of the groundwork that we need to lay to support that kind of activity. So it is, I think, the right first step, but I would probably caution people from thinking that this is going to significantly scale Ethereum to
this next upgrade specifically.
For Cancun and Deneb.
Yeah.
I think that I would probably caution like becoming overly optimistic.
I'm calling it right now.
Dankun.
So that's really interesting. When do we expect Cancun now? Like, what's the sort of timeline for that? I mean, usually it's about every 6 months, right?
Exactly. Roughly around 6 months. But, developers have been working on EIP 4844 in parallel to Shanghai. It is quite a complex upgrade, though. So I would imagine end of this year, if not early next year.
Got it.
Yeah. And fingers crossed, I'm actually kind of secretly hoping for early next year. Like, let's have some breathing room here. We've done a lot of complex upgrades already. Like,
let's take a victory lap.
Yeah, let's take a victory lap. But I'm sure other people are like, no, let's keep.
Well, that's the thing, because I recall during the Shanghai developer debate about what to put in Shanghai, there were a lot of people and obviously we know what they went with, which is primarily only unstaking. But there were a lot of developers and users who said, whoa, what about all this other stuff we want that's ready to go?
Yeah, there's going to be
there's clearly some demand to keep chugging along.
Oh, there's so much. And even for Dankun, I can't believe I'm co-opting this term now.
Either that or Kank Neb, and I don't like Kank Neb that much.
Fair. But for the next upgrade, there's quite a list of EIPs that had tried to get into Shanghai, wasn't able to, and now developers are going to need to prioritize again. To what extent do we make the next upgrade solely focus on EIP 4844, or also include things like EOF, include other optimizations to Ethereum's fee market? The list is quite long. I will say, though, that now that Shanghai is over, I do wonder. So I've said what developers are going to start focusing on, which is scalability. I wonder what the next criticism from Bitcoin maxis are going to be about what Ethereum will do in its next upgrade. Because up until now, it's been that Ethereum will never transition to proof of stake. Ethereum will never activate unstaking.
Right.
So
yeah, I'm not sure. I haven't seen what the new ETH FUD to drop is on this, but
I'm sure there'll be something.
They'll come up with something. All right, this is great. Let's talk about some random news. We got some interesting and funny items, and let's go right with Lido since we're talking about staking.
Yeah.
The news was that Lido deposits. So I assume this means they surpass 12 billion with liquid staking. The headline here was as Ethereum's Capella boosts liquid staking. I'm assuming Lido deposits means people putting their ETH in Lido and so that they get staked ETH back. And so that's more ETH validators that Lido will be spinning up.
Yep, 100%.
What's your take on that? By the way, I will say the TVL, so the total amount of ETH, so that's $12 billion worth of ETH. It was that it has surpassed. The TVL is 6 million ETH, right? So, I mean that's well over 1% of all ETH in existence is staked through Lido, and that would be just over 12 billion. It's up 20% Lido TVL in ETH terms since January 1st.
Wow.
What's your take on the Lido in general?
I mean, initially, I think that shows that there's a high confidence in Ethereum as a proof of stake consensus protocol and demand for people who want to stake their ETH, earn rewards, especially now that Shanghai has been. I guess there's a lot of people who see Shanghai as like a de-risking event of like now we should be able to stake even more because we know that we can
get
withdraw
it out if we have to. Yeah.
So I think that's really good for confidence in Ethereum's proof of stake protocol. But I would say the other spin on it is that a lot of those flows are flowing to a central staking pool. And before Shanghai even happened, I think there was lots of concerns around is Lido growing too big? Too big on Ethereum, too big to fail.
How big is it now? Do we know? I mean, I haven't looked in a while actually, but
it remains.
Is it still over 30% of all staked ETH?
Yes, is staked with Lido. And clearly their dominance and their competitiveness over other staking pools seems set to grow.
Yeah.
I will mention that Rocket Pool did an upgrade yesterday, Tuesday, so like 5 days after Shanghai, enabling staked ETH withdrawals, but also increasing their scalability. But Lido by far continues to dominate, and I think that presents a central point of failure.
All right, Donald Trump.
Why are we talking about
Donald Trump? He had released a digital trading card, Trump cards. They were NFTs.
Yeah.
I think at the beginning of the year or so, if I recall, a few months ago. There were 45,000 of them issued or mintable, and then with a cap on 45,000. And I guess because he was the 45th president. Check out the video of him announcing that drop, by the way. It's pretty funny. But I guess I'm going to call this a rugging. He is kind of rugging those purchasers of the 45,000, which had traded almost as high as 1 ETH per card at one point. Because now they're releasing another digital trading cards collection. And the second series of his trading cards went on sale with the NFTs selling for $99. And the project, so the first one, the floor price of his first NFTs is down 66% on the news.
Because there's a new Donald Trump collection. Shouldn't supporters be really happy that Donald Trump is like doubling down on NFTs as the way to like make some money?
NFT supporters?
The
or
buyers.
Trump? I don't know, but I mean, it's like, it doesn't seem scarce to me if the creator can just, release.
He's not duplicating the previous collection.
He's making
a new collection.
Is he not duplicating? I'm not sure. I hope it's not.
It's a new collection. It's like a second go around. No,
it's a totally different artwork.
I have no idea. Actually,
is Donald Trump an artist?
He clearly is. He clearly is.
Is he making these himself?
He's a influencer now, an NFT connoisseur.
Wow, so from president of the United States to mere NFT connoisseur.
Yeah,
quite a drop for the 45th president.
Or an upgrade, depending on how you think about it.
The former president of the United States is releasing his second NFT collection. The crazy doesn't, the humor and the crazy does not, it knows no end sometimes in this world. All right, this is interesting. Let's talk about David Marcus, the former PayPal executive, the former leader of the Libra initiative at Facebook, which was Facebook, Meta's Libra DM. There's too many names, but we're going to say Facebook and Libra. That was going to be Facebook's stablecoin, basically, right? It was going to be at first a basket of currencies, global currencies. We're going to back this stablecoin, which drew the ire of global monetary authorities because that looks like a international, like almost like what's it called, the SPR, the IMF's basket of currencies. I forget what it's called. They were worried could grow so large. Facebook has over 1 billion users. Maybe it's 2. I don't even know. It's a lot.
Yeah.
And so they pushed back, and then eventually they said it would be a dollar-backed stablecoin. But then eventually they jettisoned the entire thing. Right, pieces of this broke off. Silvergate Bank bought some of the API and payments tech. Aptos and Sui are 2 public blockchains that spun out from developers of Libra. And David Marcus went to found a Bitcoin Lightning Network-focused payment company called Lightspark. And just over the last week, they finally unveiled their product. It is a Bitcoin payments product. It's like Stripe for Bitcoin, right? What do you think?
I didn't notice anything particularly notable, I think, about how this differs from existing Bitcoin payment solutions, like OpenNode.
Right. Yeah, I didn't either, but it is, they have some pricing. I think you can check it out on their website. Just search Lightspark. Yeah, I guess the idea is, you're a merchant. You want to accept, you need credit cards, Apple Pay, PayPal, check out with Bitcoin.
Yeah.
Click the Bitcoin button and bam, you've got Lightspark providing that whole service for you. And there are. I mean, BitPay is one of the oldest, been around for a long time. They do multiple cryptos, OpenNode, Strike. There are several others, right? That offer these services.
Yeah.
But I will say Todd Strija, co-inventor of the Lightning Network, co-author of the Lightning paper with Joseph Poon, who works on ETHL2 stuff now, I believe. He's the senior researcher at Lightspark. So
there's some notable Bitcoiners.
Maybe there's more to come. And, I agree. From a product standpoint so far, it's interesting, but it doesn't seem that much different than what we've seen many people start. You can even use BTC Pay Server, which is an open source plugin to let you accept Bitcoin. You can't do fiat conversion, but David Marcus, pretty famous, long-time expert in payments. Like, I don't know, are we bullish on this?
I really like the focus on payments as a use case for crypto. I think that really goes back to like the fundamentals of like what crypto can do, and it's even if it was only a duplicate, I think, of like other payment solutions. Like even then, I think we need more focus and innovation and research and like capital being spent on building out the rails of how crypto can be used as payments. It's really interesting that David Marcus from the Libra project went to found this company, and some of his other like developers and other researchers went to go and found other like L1 general purpose blockchains like Aptos and Sui. It kind of does show like how diverse the amount of like infrastructure and like the amount of development activity that's happening, I think, in just building one crypto project, and how it's like fractioned off into like several innovative ideas of like how to make crypto better.
I love it. I think it's going to be interesting.
Yeah.
All right. One more topic. We've written a lot about Mika. I call it Mika, but I think they call it Mika in Europe. The Markets in Crypto Assets legislation, which is a comprehensive but bespoke regulation framework for crypto. Regulates things like exchanges and stablecoins and trading and market infrastructure, how to operate legally in Europe. Been in process for many years. I'm told that it is set for final approval by lawmakers who will vote in the EU Parliament tomorrow on Thursday. So if it was good, then you listen on Friday and it will have happened. Apparently, it is going to be easily approved in a vote. It has wide support. Are we bullish about this? I know Tim Grant, our head of Europe, Middle East, and Africa, is.
Yeah, 100%. It's been a long time coming. And following the approval process for MiCA has been so illuminating in the EU lawmaking process. Oh my gosh, the number of different approvals that need to be had, and like how easily something that has been passed by one body can be reverted back into draft phase.
Yeah.
And then like picked back up again like several years later is kind of wild to me. I will note that one thing like specifically about the bullishness, bearishness of what MiCA means to crypto adoption in the EU, MiCA does set forth quite a bit of like regulatory clarity around how crypto companies should be overseen. But there are parallel other pieces of law that are being built around anti-money laundering and KYC that I think are also important to track alongside MiCA. In that MiCA is a very comprehensive piece of legislation, but it's not the only piece of legislation that focuses on how crypto can be used in the EU. And now that, as we're following MiCA, obviously there's quite a lot of conversation around what this means for AML and KYC compliance that that, in my opinion, are looking to be more restrictive.
Yeah.
And could be more damaging, I think. So
yeah, I saw this. There is an AML bill that you're referring to that looks kind of similar to the U.S. Treasury Department's DeFi report. They want DeFi services to register and conduct KYC on other users, DAOs.
NFT exchanges.
I think they put limits on the transferability of cryptos to and from unhosted wallets. That phrase is back.
Yes.
So it is damaging and also, probably impossible to comply with for many types of truly decentralized applications, right? It's not great, but that's not in MiCA. They don't actually have AML in MiCA, so this is a separate thing to pay attention to.
Mm-hmm. Yeah, and I do believe that on the legislation around unhosted wallets, there was a version of it that did get passed like a year ago by the EU, and the language around it was significantly watered down since the original version. So I do actually think that there's quite a lot of benefit to the lawmaking process being so like collaborative and so long.
26 countries,
Some of these laws get changed quite drastically before they are signed. So
still some chance in your mind to modify this one too.
Oh, 100%, yeah.
I will say too, you talk about following the EU legislative process. No offense to the Europeans, but it makes me really value things that we have in the U.S. like Congress.gov and C-SPAN, where it's like very easy to understand the current state of a bill. Very hard, but I get it. 26 nations come together for that. Really interesting stuff. We'll follow it more. Christine, as always, so great to have you on Galaxy Brains.
Thanks, Alex.
That's it for Galaxy Brains this week. Thank you so much for listening, as always. And thanks to our guest, Christine Kim from Galaxy Research and Beimnet Abebe from Galaxy Trading. That's all we've got. Have a great weekend, and we'll see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.